Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. If you have questions or topics that you wish to discuss, whether on this topic or an unrelated topic, please don't hesitate to chat it over. Today, we're here to discuss how reverse rollover to a solo 401k unlocks a Fidelity Backdoor Roth IRA. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So here's a quick overview of what we're here to discuss today, along with any questions or topics that you might have as well. The problem is high income earners cannot contribute directly to a Roth IRA. And that's because above a certain income amount, one is not allowed to make a Roth IRA contribution. The solution is a backdoor Roth IRA strategy. The complication is the pro-rata rule. So under the pro-rata rule, if you have a mixture of pre-tax money, so deductible money, as well as after-tax non-deductible money in your IRA, when you transfer the funds from the traditional IRA to the Roth IRA, you need to transfer a pro-rata amount of the pre-tax as well as after-tax money. So in that scenario, making that backdoor Roth IRA contribution will end up causing a taxable event. So an advanced solution is a reverse rollover to a solo 401k. So we want to go over that process step by step and how it works with my solo 401k Financial and Fidelity specifically. So let's first lay the foundation with understanding the backdoor Roth IRA. So with Roth IRA contributions generally, there's a limit above which there's an income limit where if you make too much money, the rules do not allow that type of individual to make a Roth IRA contribution. So when they make a contribution to an IRA, they would have to make a non-deductible contribution. So it doesn't reduce their taxes. So it's not a pre-tax contribution. And then transfer the money. So even though they can't make a Roth IRA contribution, they could still make a non-deductible contribution, even if their income is high, above the applicable limit. And then step two is transfer those non-deductible IRA funds over to a Roth IRA. This works because it essentially allows someone to have funds that end up in a Roth IRA, hence the name Backdoor Roth IRA. Now, the problem is under the pro-rata rules that apply to IRAs, which apply differently to IRAs than, say, a solo 401k. But the way that they apply to an IRA is they look across all your IRA account balances. And if you have pre-tax money in your IRA, and then you make an after-tax non-deductible contribution, step one, when you get to step two to transfer those funds over to the Roth IRA, under those pro-rata rules, you have to take a pro-rata portion of the pre-tax money as well as the after-tax money. So if 90% of the money in your IRA accounts, again, you have to look across all your IRA accounts. If 90% of those funds are pre-tax money, that means 90% of the converted amount that ends up in your Roth IRA is deemed to have come from those pre-tax funds. So that means you're effectively making a taxable pre-tax to Roth IRA conversion with respect to that portion. So it creates a taxable portion. This is a common issue with those that are making backdoor Roth IRA contributions. Now enter the solo 401k solution, specifically the reverse rollover. So first of all, you need to be eligible to set up a solo 401k to take advantage of this solution. What does it take to be eligible? Well, you have to be self-employed with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. So if you set up a solo 401k plan, like the one offered by my solo 401k Financial, which accepts rollover funds, you can process a reverse rollover. So reverse rollover refers to transferring money from an IRA into a 401k. Typically, when one thinks of a rollover, traditionally, you think of it as transferring from an employer plan like a 401k to an IRA. So this is transferring it back to another employer plan. Now, it doesn't have to come from the plan that it originated from. It can be transferred, say, from a former employer plan to an IRA, and then transfer from the pre-tax IRA to the pre-tax solo 401k, as long as it, again, is a plan like the one offered by my solo 401k Financial that allows for rollover contributions. So transferring the funds, those pre-tax funds in your IRA to the pre-tax solo 401k is going to allow someone to avoid the pro-rata rule. Because now when they go to make those non-deductible IRA contributions, step one, as part of the Backdoor Roth IRA transaction, and then they get to step two to transfer those funds to their Roth IRA, they'll only have after-tax funds. They'll only have non-deductible funds in their IRA. So they'll have a clean IRA, a clean slate. So the clean IRA strategy, again, involves moving those pre-tax dollars into the solo 401k, leaving only after-tax contributions in your IRA, allowing someone to make that backdoor Roth IRA contribution without triggering a taxable event. So why my solo 401k Financial? We accept reverse rollovers. Our plan allows for our clients to process a reverse rollover of pre-tax IRA funds to their solo 401k. Number one. Number two, we provide tremendous support, right? With the paperwork, right? We've helped thousands of customers process rollovers to their solo 401k, and we track that knowledge. We have a deep knowledge base because, as you might imagine, the process is going to certainly vary from institution to institution. For example, an IRA transfer at Vanguard versus an IRA transfer at Fidelity or Schwab or a different institution. The step-by-step walkthrough. So number one, set up the solo 401k, which is going to entail first confirming your self-employment eligibility. Open the solo 401k plan with my solo 401k Financial. You can do it easily on our website 24/7 at mysolo401k.net. Just click on open account and then solo 401k. Ensure that you've got the applicable account over at Fidelity, or because ultimately this webinar is focused on doing a backdoor Roth IRA at Fidelity. So if that's your goal, you got to have a Roth IRA account at Fidelity, a traditional account at Fidelity when the non-deductible funds will ultimately be deposited to. And remember, under the pro-rata rule, even if you have your Roth IRA account at Fidelity and your traditional account at Fidelity where you're going to make the non-deductible contribution to, under those pro-rata rules, it's going to look across all the different IRA accounts that you have. So if you've got an IRA somewhere else, for purposes of applying the pro-rata rule, that IRA somewhere else, the money in there is going to apply, whether or not you do have any funds that will trigger a taxable event under that pro-rata rule. So if you have an IRA somewhere else, step one, you would move those pre-tax IRA funds, whether they're at Fidelity or, again, somewhere else, into the solo 401k. And again, we assist with that tremendously, leveraging our knowledge base, helping clients with the forms that apply. Step two, make the backdoor contribution. So that means making the non-deductible contribution to your traditional IRA, for example, at Fidelity, then transferring those non-deductible funds, of course, working with your tax advisor, et cetera, transferring those non-deductible funds into the Roth IRA at Fidelity. All right, well, that takes us to the end of the slides that we wanted to share. Thank you so much for checking out today's webinar. If you found this to be helpful, please like this video. It helps us to get the word out, whether on YouTube or X or Instagram or LinkedIn. Please share with others that might find it to be helpful. Please subscribe to our channels. Again, whether you're on Instagram or YouTube or X or LinkedIn, as we do go live every day. So you can find out what we're discussing each and every day. You can come with questions or topics that you want to discuss as well, as it's always an open forum. We also invite you to our community. We have the largest community of self-directed retirement investors. We have over 30,000 members. We have vibrant forums. We have a library of videos and webinars. Email us at business@mysolo401k.net if you don't have access. It's totally free to join. All are welcome, and we'll quickly get you access. Thank you for the Backdoor Roth info. I'm setting up my solo 401k plan. I will have pre-tax and after-tax contributions this year and plan to do a Backdoor Roth conversion this year. And I expect to have Roth contributions next year. I want to confirm I will need to set up 3 bank accounts and 3 brokerage accounts. My company will wire funds to the appropriate account. Then I have to transfer those bank funds into the brokerage account. So thank you so much, first of all. And yes, if you will have 3 different types of funds inside your solo 401k, then you need to have at least 3 different accounts. Now, you don't have to have 3 accounts at a bank and 3 accounts end up at a brokerage. You can if you want to, but it's not necessary. For example, if you could just have the brokerage accounts and you could make the contributions directly to the applicable brokerage account. But that's a great question. Thank you so much for bringing it. We appreciate it. If there's other questions or topics or a follow-up question, don't hesitate to chat it over. Thank you so much for the great participation. Again, please like, please subscribe. So again, it's not required to have a bank account, but if you do have a bank account, it's going to be up to the bank whether there are minimum balances or whether there are applicable fees. But any fees would be paid out of the solo 401k funds. Good question. All right, again, well, thank you so much, everyone. We'll give it one more moment to see if any more questions come in. And finally, can I add the bank account later if I do a brokerage account now? Oh, most certainly. We have many clients that start out with one type of account and then add the other later. And we'll help you open up the account. Exactly. A lot of times people will start with a brokerage account, and then once they've accumulated a certain amount of funds, then they'll add a bank account to help facilitate alternative investments. Awesome. Thank you so much. All right. Take care, everyone.